So recently I did a poll on my YouTube community tab in order to better understand what it is holding us back from actually beginning to invest. However old you are when you started investing, unless you're Warren Buffett, you always regret not having started investing sooner.
I want my partners to be on the low side on expectations coming in.
So in this video, I'm going to quickly go through the reasons why people don't start to begin to invest as soon as they can, and some of the reasons why this shouldn't really be a problem. So as we know, investing long term can really help build our wealth, can help us battle inflation, and put us in a better financial situation to weather some of the storms that come down later in life in retirement. So the first biggest reason why people don't start investing is the simple fact that they didn't even know what investing was. If you're in the UK, like most of my audience is, we are never told in school what investing is. In fact, we might be acutely aware of what investing is, but we have the image of Wolf of Wall Street or traders in the city doing stuff with graphs and earning lots of money, but us being inaccessible to that lifestyle. We might have the idea that investing is only for people in suits, only for people who have gone through university studying economics or banking, and that it is way out of our remit as normal people. However, this couldn't be further from the truth. In fact, today it is easier than ever to start investing with as little as just £1.
As £1.
And I'm sure that anyone watching here can spare £1. This is because of a big factor called inflation, which I'm going to touch in a little bit. Basically meaning £1 doesn't really get you anything. But anyway, most people don't even know what investing is until probably their late 20s, most in their 30s, and even some in their 40s. It seems like companies want to shove investing information into our faces. I'm pretty sure right now, if you're on the tube, you would have seen so many adverts about the ISA season, many different companies trying to shove it in your face that you can open an account and put in £20,000. This is all meaningless to us, and our education doesn't help that at all. There are many brokers that you can use to sign up with a free account. Some of them might be in the links in the description down below. However, you can pretty much pick any company these days and open an account to start investing. But if you do your research and if you go for a trusted broker, the fees can end up being a whole lot less, meaning that you have more money when you retire or whenever you want to pull out your investments.
Because you are paying for things that should be free.
For most of these brokers that I speak about, all you really need to do is to become a UK resident, and most of you watching are probably one anyway. Once you deposit your account with as little as £1, you can start actually investing in fractional shares. Now essentially what investing is putting your money and buying shares of a company that essentially will have a higher value in the future, meaning that what you buy now, so your sacrifices now, will be paid off in the future when the value of the stock goes up. Furthermore, companies also pay dividends. So for example, Coca-Cola has been paying dividends for 60 plus years. That is just by owning shares in a company. Coca-Cola will actually pay out 4 times a year a portion of the profits that it earns. As an investor, by holding on to an increasing amount of shares as you go older, as you start to deposit more, you will, when it comes to retire or take out your money, will have an increasing value of assets that you own. And these assets basically give you a passive income just by holding these stocks. You don't actually have to work for the company. You don't actually have to do anything for the company, but the company, as it grows, will give you back some of that value as a thank you of holding on and being a shareholder for so long. Although that is basically investing simplified, investing does come with its risks, and that is the second biggest reason why a lot of people are held back from actually beginning to invest, and that is the fact that they can lose money. Now, I'm not going to sugarcoat it or say that you won't lose money, and even if you place it in a certain fund like an ETF, maybe even the S&P 500, there is no guarantee that you will actually not lose money. Therefore, investing, unlike savings, has a small risk factor towards it, and if you can't get over that, then investing is probably not the right thing for you. What you should know is that the stock market overall, so all the companies within the stock market that are publicly traded, they will go through periods of fluctuations. So currently we are facing recession type behavior, so the companies are not going to be valued that high. However, coming out of recession, these companies overall might be valued a whole lot more, meaning that if we invest for the long terms, so if we buy stocks, hold on to them for the longer term, we can actually reap the benefits of higher values. That being said, it kind of goes back to the first point in the fact that we haven't actually been educated on investing and how the stock market works, how we should hold for the long term, and the fact that diversity, which is buying many different companies across different sectors, will add security to our portfolios, so the complete total of stocks we have. Things like that, learning more about investing does really hold us back, and we have the fear that we can lose all our money, which in most cases, unless we put all our money into one company, which is a very low diversity index, it is unlikely that holding long term we will actually lose money. In fact, if you think about it, not investing is actually a whole lot more risky. This is because of what we talked about in the beginning, inflation. So currently inflation in the UK is about 10%, meaning last year and every year that is following at the current trend, £100 equals to £90, and then that £90 essentially becomes £81 the next year. Soon you'll find that even £10,000 is not going to be worth as much as you had thought because of inflation, kind of how Freddo chocolates used to be 5p and now they're close to £1, which is crazy to think.
You'll see the price of the Freddo bar has been increasing by 5.74% every year.
So think about investing as a vehicle to beat inflation. As companies advance and go through the years, the price of everything goes up, and in order to survive they must increase their profits above inflation. So putting your money into the stock market is kind of putting your money into a vehicle that is supposed to actually beat inflation by a few percent on average and a few more percentage points if you're lucky. So although investing can be a great tool to improve your long-term wealth, it can also be a tool to beat inflation, and instead of putting your money into a bank where the interest rates will always be lower than inflation, you end up actually losing money put in a bank, you can try to put your money into high quality broad-based ETFs with low costs and kind of ride out the storm and beat inflation at its track. And this kind of leads on to the next point, that investing is very difficult. One of the reasons why investing and many other things actually sound so difficult is that people profit off simplifying it. So basically investing doesn't have to be so difficult, but these fund managers who are earning in excess of £200,000 a year, they need business and they need to make it sound like investing is a lot more difficult and that you can't do it without them so that they can feed their family, because of course they have to eat gold.
They wouldn't want you to see how they bathe in a bathtub made of gold, filled with gold. Even the sink plug is gold.
So I actually started this channel to show people how easy it is to start investing. In fact, today it's easier than ever to just automatically invest, so you don't even have to think about it. All you really need to do when it comes to investing is to diversify. So that means buying a few stocks over a few different sectors and countries and call it a day. In fact, it is even simpler than that, because what you can do is just buy an ETF, which is an exchange traded fund, meaning that it automatically buys all these stocks from different sectors and all over the world. All you have to do is just buy one fund every time you have the money per month, and you can leave it to automation. That literally is it. Look back in 40 years to see your millions. It can't really be any simpler. So I feel like the complicated stigma is still attached to investing, but my channel and many others have shown how simple it is to invest. In fact, if you actually try to invest yourself by picking individual stocks, you are more than likely to actually perform worse than the market, meaning that if you just had bought one diversified ETF, you would have made a lot more money on that instead of actually picking individual stocks. And the final thing was that people think investing is a scam, and this is something that definitely held me back. I think we've all received those DMs on Instagram about people making, you know, X amount per day trading, and you kind of look at it and think it is a scam, and then you see another 10 of these and you're thinking investing is definitely a scam. And this held me back because I thought I didn't know who to trust. I didn't know that investing was so simple. By going through reputable brokers like Trading 212 and InvestEngine, for example, I just didn't know where to start, how to start. I didn't know about investing. But the thing is, of course there are scams. There will always be scams, especially when it comes to investing, because that's the easiest way. People are always looking for a good return. As a rule of thumb, if someone is offering you more than 10% annual returns, it is more than likely it is a scam. Honestly, you don't get more than 10% annual returns even in property or anything like that. If someone's offering you 10% a week, it is almost guaranteed that it's a Ponzi scheme. Back in uni, I actually had my first Ponzi scheme. At that time, I didn't realize it, but it was offering a lot of return per week, which I should have noticed was a Ponzi scheme, but that's another story for another time. So make sure to check out some of my other videos, and I will see you in the next video.